Hey everyone, I am going to try to make a short video here, as short as I can, but very useful, hopefully. Wanted to show a little bit how I find out where I'm going with my trades during each day. So these boxes that you see here in different colors, that's the session indicator. I've talked about it in my previous videos. It's an indicator here that will show me Asia session, the European session, and also US session. There's different, varying different indicators out there that will show that to you. Why is that helpful, you may ask? And it's always good to know what happened during the Asia session and what happened during the London session and so on. Now, the way I do it is I'll pop in here and I'll take a look at Asia session, which is the orange. Now, one thing that I've noticed, and there are other traders out there, especially from Japan, that will talk about how Asia is a contrarian trading approach, which basically means that they will go opposite to what the trend was. So if the trend was down, they will go up, and if it's up, they will go down. That's not always the case, but most of the times that seems to be repeating and seems to be very successful. So if we look, for instance, for today, last night the Asian session was down and then up a little bit and went kind of back to equilibrium, which means there's basically stop losses on both sides of the Asian session. Now, the London guys in New York are famous for going after these stop losses. And that's why you can use the Asian session as an idea of what could happen during the London and New York session. So what we see here is Asia went down and then went up to the middle. So again, stop losses on both sides. London started off with taking out the stop losses on the top so they could get some shorts going. And then they obviously went down here and took out any long stop losses for the long entries, and they're working that one right now. So if the market's down at the end of the day, Asia will most likely trade up. That's not a guarantee, so do your own analysis, but you can take a look at this and you can go back and look at history. So, but the other thing is, let's do this for a second. Indicators. I'm going to take off the session indicator for a second. So let's say here's your high, and that's a fact, right? And we didn't have a new high above that. So then we have the low here, right? Low here, and then we had a new high, which was lower than that previous high. Right, so what we wait for is for price to break down through that and then come back up and then go short again, right? Not everyone knows this, but now you know. So you can keep doing this. So you have the low there, broke through, came back up. Where's the new low? The new low is here, right? So then you wait for price to come back up. It did, right here. And then it broke down. And then we can put another new low here and wait for price to come down, and broke through. It did, and came back up in here, and then it broke down again. So on each run you have 60 pips, 60 pips, 60 pips, right? Right, so that's all good if you're a swing trader, meaning you hold your trades for a longer period of time. So now let's get down to 30 minutes and let's see how this looks like. Right, so we're going to fix this up. We had the low there, waiting for price to come back up. Broke through, came back up. Yep, great. And then broke through and came back up. Now I'm not marking this low yet, but you'll see later why. Broke through, came down here. So that means a new low. We put a new low here, right? Broke through, came back up. Didn't make a new high, so we're still in a downtrend. But price is starting to hesitate. And that's one thing you need to observe. Is you don't have the same, you see this move from here to here, it's pretty decent push. It's a 100 pip move. The next one, it's a 123 pip move. The next one, I'm just doing from high to low. 70. So the momentum is starting to slow down, which means something is about to change. But it's not going down, it's going up, right? And for now, it's going down. All right, so we had a low, we came back up, we had a new low at the same place as this low. So at that point, you could have gone long again and rode it back up again. And then you came back up to this area and you could have taken it down again for an 80 pips. Now we have a new low. So let's paint that new low, which is here. Right, so now we wait for price to break through. Price broke through here, came back up here, and then you could be short. Right now you would be sitting on 26 pips. And the run will most likely be down to here. If it's like anything else, then the run would be, you can use this as a stick. Take one of the highs to one of the lows. So it's reasonable to say the price would come down here. Now you can do it from the breaks. So we take from break to the next low, from the break to the next low. See, the stick is getting shorter and shorter, right? From the break to the next low. Still seems to be the same area, right? So if price is going to come down, it's going to come down here. But again, the aggressive move down is starting to fade. All right, so we're 30 minutes. Again, trying to get back into where I'm at, and the rest of the DFX group is usually at 1 minute, 5 minute, and we're scalping. So while we get a lot of pips, it's not all about the pips, it's about the pip size or the trade size, basically. Again, let's, we have all of these moves, so we know those. Broke through, came back up, broke through, came back down, broke through, came back up. And so we're in this area right now. So it seems to hold, right? So we know if we have a POC over here, for our guys that trade a POC, you have basically a POC here, right? So you know most of the runs when it breaks through is about 60 pips. So if you have a good clean break of the POC, then you have a 60 pip run, and we had a run there. So that POC is out, now we're just waiting to see what price is going to do. We can't really see it on 15 minutes, but we can see that the volume is starting to indicate something. We have down wicks here, so we still had a push down, but this volume is much higher than this volume, yet the body size is about the same. Right, so this did indicate that we were going to go up. Now we start to see the wicks on the top, and so that's very likely that we're going to see a move up, because we haven't had these clean lower lows, lower high, but we're still having it. We have high, lower low, lower high, lower low, lower high. So we're hoping we're going to get a lower low, but the price is hesitating. So let's get down into it. This is where we can start drawing a little bit more. So we broke through. So this is a new low here. Right, we came through, we came back up, we came through, we have a lower high. Right, so this support is getting tested. And then it broke through and came back up, and then broke through again and came back up. And now it's down again, right? So, but here's the thing. A lot of people will tell you if a support or a resistance gotten hit many times, then that is a strong support. That's actually the opposite of what it is. It is weaker for each time it gets hit. And you can see the weakness in the money getting thrown at it, basically. I'm just going to do this. So we see the move coming down here, support holds, it goes back up, comes down, support holds, goes back up. So normally someone would say, well, this is a fantastic strong support, but it isn't. What you can see is that the curve up, the money invested in going up, is less and less, meaning there's no interest in going up. So that would indicate that the shorts are being loaded up. So they go up, trigger stop losses right above this high here, get the stop losses. That's where you put your stop losses most likely. Meanwhile, I'm over here picking up your stop losses and going short, and I'm very grateful for that. But that's what the big money does as well, right? So they come up here, trigger your stop loss here, goes down. Now the ones that have learned about support, they say, oh, it's going to bounce it. Yeah, it did. What? It's going to bounce it. Yeah, it did. But the short positions, there's almost no inventory left of short positions. So now here comes the big move. No money invested in the long or money invested in the short. So it's got a breakthrough. It did. Now that support became resistance. It got hit, right? And we know these guys that are short up in here, they're going to invest in that position down, just like they invested in that position up. And they're going to sell, 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 sell. Right? And then you're going to buy, 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 buy. Well, you're going to sell as well, obviously. And then what they're going to do is they are going to turn. Trigger stop losses. They drive the price back up here. Everyone that has some decent trades in here, they're getting their ass kicked all the way up to Sunday. And then it's down again. But look at this move. This hesitation. So there's a lot of money going down. Still money going down, but not as much. So what will happen here? Well, most likely we'll come back up in here. And then we'll have another bounce down here that's smaller. And then you will have a break right through this. And then the trend has changed. So what does that mean for us trading POC and for everyone else? Well, there's weakness in down POCs right now, so we have to be careful of that. So if we get a down POC in here, then just be cautious about there's probably not that much juice left in it. So let's get down to 1 minute here. Right now there's an up POC visible on the screen. I'm not going to say where it's at because the DFX boys will know where it's at. And then we have this little area here, this little box here. That's accumulation. So my dollar is on that this is going to go up. And I would not enter at this point because there's not enough investment. Besides, I believe there's a big investment coming down. A little bit less investment coming down because the guys that are short, they're getting out. They're taking short up here, getting out here. But they're less and less interested. There are less and less of them. Less and less of the smart money, big money, whatever you want to call it. Because now they're banking on the long positions. So now I believe we will have a break through this one. It's possible that we'll come back up here and then we'll have a down move here and then we'll have a breakthrough. There's indication that that will happen based on the POC that's on the screen right now. But time will tell. Right now it's very calm. It's 11:41 a.m. on June 17th, 2020, and Powell is about to speak at noon, testify about the economy, and that's most likely what everyone's waiting for. So If there's weakness in the dollar, then pound goes up and euro goes up. So we're just going to sit and wait here. But again, when you trade, just start looking at where's your high, right? You have a high here. Let's say you come in here. I'm going to just, for simplicity's sake, let's say you come in here. Here's the time of the day for you. You come in, you see a high, you see a low, you see a lower high, you see a low, then create a new low. You see a high that's the same as that. You don't know what to do. It's reasonable to expect that this one will go down again, but right now you don't know what to do. Are you going to enter? Yeah, probably, because you can't wait. But this is the low here that you should be drawing. A low. And then you had a new high, a lower high. You had a new low. Remember the investment in the shorts, support, bang, money going long, bang, money going short. There's not more investment going up, right? Because if it was, then we would have a new high, which would be a higher high. Now we have a new low here, and some people are going to say, well, it's a higher low. Yeah, sure. Keep telling yourself that. But you didn't have a higher high. So you have a low here. So this is a little bit of a coil, right? Something's about to happen. Someone's loading up in position. What are you going to do? You're just going to wait. You have this low that needs to be violated, all right? So time goes by, time goes by, time goes by. Violation, all right? Price broke. Oh my God, now you have to wait even more. Well, you're in 1 minute, so that's okay. Just wait for price to come back up. Guess what? Price came back up. Now you can enter with confidence. Alright? So if you have a down POC now, after this break, well, now there's money in this short. And they're going to obviously come up and pick up the stop losses. And so down POC, after a violation like this, will have a whole lot more juice. So wait for the price to come up, and it did. Then get your pips. There's 21 pips. There's 24 pips. And there's 2 days of pips. Right? Anyway, that works for all of you. So start drawing that stuff. Sorry that this is longer than I want it to be, but I don't know any way to make this shorter. I'll try to trim this a little bit after production. But again, if we go back here, I just want to show you guys. Again, start drawing it. You come in here, you have the low here. Wait for the low to be broken. It got broken, came back up. Guess what? Now there's juice in the short. Get your short. Put your shorts on and go short. And if you missed that opportunity, where's the new low? Came up, went down. There's your new low. Wait for price to break. Price came back up. Now what? Go short again. Where's the new low? Well, it came back up, broke through. There's your new low. Oh, that's a terrible box. Anyway, there's your new low. Wait for it to break through. It did here, came back up. Then what? Payday, all day long. Right? Now, if we're looking for a down POC or you're looking for a short, but you see this, price comes back up over this, almost comes back up here. Now there's less money in here. Now they're kind of done with this short. So what do you have to do? Well, you have to reverse this. So long. So this is the new high. I should be drawing this in different color. But if you get a break above this, and you wait for the break above, and for price to come down, and then you go long. Right? It's still a downtrend. But as I said earlier, there is an up POC on the screen, and I'm not going to tell you where, but that's most likely what's going to happen. because we're going to have a move up now. So anyway, that's 20 minutes. I'm going to cut it down and hopefully get it down a little bit further. But use that, and that will help you home in on the POC, get good POCs. You get strength in the POC break. For you all regular traders, this will help you. I know you can't wait to get into a trade, but do wait. Do yourself a service. Wait. Use the Asian session as an indicator, but do try to look backwards a little bit. It's not always that this will hold, that if the Asian went down, then the market's going to go up. It's not always, but it's a pretty good barrier. Anyway, that's where we're at. So enjoy and have fun, and I'll see you soon. Bye.